In this video, we're going to be performing a deep dive on Ford's dividend safety. To begin, let's talk about Ford's business model. Ford was first incorporated in 1903 and has grown to become one of the world's largest automakers. Along with the manufacturing, distribution, and sale of its popular assortment of cars, trucks, and SUVs, Ford also operates a large financing business. Ford generates nearly $150 billion in annual revenue and trades with a market capitalization of $38 billion. Ford is one of the most well-known high-yield dividend stocks. The company's current dividend yield is 6.2%. With that said, Ford is not a consistent dividend growth stock. The company has only been paying a dividend since 2012, which excludes it from being included in dividend growth databases like the Dividend Aristocrats. For the remainder of this video, we will discuss Ford's dividend safety from three perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, and its dividend safety in the context of its current debt load. First, let's discuss Ford's dividend safety in the context of the company's current earnings. When Ford reported second quarter financial results on July 25th, the company updated its earnings per share guidance for fiscal 2018. Ford now expects to generate adjusted earnings per share between $1.30 and $1.50 for the 12-month reporting period. For context, Ford currently pays a quarterly dividend of 15 cents per share, which implies a dividend payout ratio of just 43% using the midpoint of Ford's adjusted earnings per share guidance. Said another way, Ford's earnings could be reduced by a factor of 1/2 and the company will still generate enough earnings to cover its current dividend payment. Using earnings, Ford's dividend is very safe and we have no concerns with its sustainability moving forward. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Ford's current dividend payment to its free cash flow. During the 6-month period ending June 30th, 2018, Ford generated $9.915 billion of operating cash flow and spent $3.264 billion on capital expenditures. Taking the difference of these two numbers, we arrive at free cash flow of $6.687 billion. For context, Ford paid just $1.392 billion in cash dividends during the same time period. Dividing this number by the $6.687 billion of free cash flow generated by the company allows us to compute a free cash flow payout ratio of 21%. Using free cash flow, Ford's dividend payment appears even safer than it did with earnings. We have no concerns about the company's ability to continue paying its dividend moving forward. The last angle that we will use to assess Ford's current dividend safety is by looking at the company's current debt level. More specifically, we will see how much the company's weighted average interest expense will need to increase before Ford's free cash flow will no longer cover its dividend payment. In the second quarter of fiscal 2018, Ford generated $301 million of interest expense, excluding its financing segment, from a debt load of $18.8 billion. This equates to a weighted average interest rate of 6.4%. The following image shows how Ford's free cash flow and dividend coverage will change with respect to changes in its weighted average interest rate. As the image shows, Ford's weighted average interest rate would need to rise well above the 20% level before its dividend would no longer be covered by free cash flow, assuming all else was held constant. Accordingly, our opinion remains unchanged. Ford's dividend appears to be very safe for the foreseeable future. Thank you for watching today's video, which performed a deep dive on Ford's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover SureDividend's investor education efforts. If you are interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.